All right. Well, welcome to another exciting podcast series at the Walsh College Creator Lab Studio. Today, I am so excited to be joined by our guest, Mark Gelbman, who is a senior loan officer at Union Home Mortgage, a proud Walsh College alum, and the chair of the Troy Chamber of Commerce Board of Directors. We are so excited to have you here, Mark. Thank you for joining us.
Well, thank you very much. It's great to be here.
Oh, Mark, I was so excited to learn that you were a Walsh College alum because, as you know, the Troy Chamber and Walsh College have an incredible preferred educational partnership where chamber members and children of the members for platinum or at a small fee can get educational discounts, rental discounts, access to career fairs, so many great things. And then to learn that you were moving into the chair role was just so exciting because you are so active in the community. But I really wanted to talk with you today a little bit about your journey. What brought you to Walsh, not too long ago, right? And then also your career path and just what you've learned along the way. So many times stories of our alumni and our students inspire so many, and yours will do that today. So let's start with that.
So I started at Michigan State. I graduated high school in 74, so I've been around a while. I went to Michigan State, and like so many other students, especially in that time in the 70s, I just didn't know what I wanted to do. I went in as pre-med for 2 years, passed out in the cadaver lab.
Oh, gosh.
Decided that maybe that wasn't for me. Changed to business and really just didn't really know what I wanted to do. So I left state and went into the working world. I worked mainly in the restaurant business. I worked for Chuck Muir Corporation Management. Mm-hmm. And then I was sitting in a management meeting at the restaurant, and I noticed that nobody around the table could run numbers. They couldn't read a P&L statement. They knew how to do what they did. So I said, well, I need to go back to school and get a degree so I can move up the ladder. So I had a cousin that had graduated from Walsh as an accountant, and we talked about it, and she says, yeah, it's a great school. It's really hard, but it's a great school. So I had to take a couple interim classes during the summer and catch up because there was a little bit of a gap there, and then came to Walsh. I got my bachelor's in business with a concentration in finance and graduated in 87. So back then, it was a lot different than it is today.
I can imagine.
They were just drawing up the plans for the Berry Center.
Wow.
I'm not sure if they were about to break ground. They were clearing out the back 40 where the parking lot was to make more room. So we knew that it was going to expand. We kind of knew what it might look like, but that was about the size of it. And the front end of the building nobody had any clue on the front addition. So it was a lot different back then. Everybody came to class for the most part. My journey at Walsh, though, was when I first got here, it was very different because first of all, almost all the instructors worked in the real world, which was a lot different from when you go to a major university. And I noticed that a lot of the students were older and married and had kids and careers, and it was just a very interesting process. And I think that it just adds to the overall educational foundation that you get from Walsh.
Oh, I love that. So wait, let's go back. You have so many exciting things. I didn't know we were going to bring this up, the Berry Center. This is so cool. Okay. So first, I love how you said you had a cousin that went here. We hear that from so many of our students and alumni that they were referred by someone who had a great experience. And I love that he said it's kind of hard because, we are challenging. I mean, we want to make the learning fun and real life and applied, but this is a rigorous degree. And we really want to make sure people know that when you come here, you'll work hard. We will support you. We'll be in your corner, but you will earn a degree of value. And I just loved how you said these were working adults. They were serious about life. They were serious about family. They were serious about advancing their career. And then the Berry Center. So how cool that you came kind of at the beginning of when we were really expanding.
Right.
Both the front of the campus, which is now the Troy Chamber of Commerce offices, corporate headquarters, and also the Berry Center. So that's exciting.
Yeah, it's when I told my dad, because I wasn't the greatest student at State. Uh-huh. So when I told my dad I was going to go to Walsh, he kind of looked at me and goes, really? Oh. I will tell you that we graduated. Our graduation was at Henry Ford Auditorium downtown. Mm-hmm. And he stood up as I watched. He goes, that's my son. He couldn't believe that I actually graduated college, so much less from Walsh. So it was pretty cool.
Mark, that's incredible. And with a BBA with a concentration in finance.
Yeah.
And I love the story of how you saw a need. You said, look, these folks, they need help with the P&L. I'm going to go back to school to up-level my skills so I can advance, because you saw how there was a limitation to how far you can go. And we know today there's so much conversation about the value proposition of a degree. But I can tell you, just like you shared your story, you're not alone. So many of our students and alums say, when I went back and I up-leveled my education, I had greater opportunities. And it sounds like that was the case for you.
Yes. So I graduated and went back into the restaurant business, or I attempted to, and started interviewing. And now that everybody said that I was overqualified. And I was like, okay. So in the meantime, one of my instructors, Leon Lebrecq, who Walsh is very familiar with.
Yeah, we know Leon. Great supporter.
I bumped into him at a local restaurant that's no longer around, and he goes, "What are you doing?" And I said, "Well, I'm bartending," because that's pretty much how I put myself through Walsh and working in the computer lab. And he goes, "Why don't you come teach?" So he was the company he was involved with at the time. They taught financial education to Fortune 500 employees. So I did a little bit of teaching part-time until they discovered that I knew how to use a computer. And then they hired me for full-time, and we started doing all the books in-house, and then we spun off and formed our own company. So that was really a great experience, and it taught me a lot about teaching and a lot about how people think in the real world about their finances, and how to explain stuff on a very easy level to people so they don't get overwhelmed. My time with ETI, Educational Technologies, came to an end, and I'm like, okay, now what do I want to do? Sold my stock, and I did sell life insurance for about, a few months. Couldn't do that. I was one of the guys that was training me. He was old school. Hey, we're going to go to this guy's house and after dinner and make the husband feel bad because he didn't have enough life insurance. So anybody who knows me, I couldn't look at myself in the mirror. So that didn't last very long. And I have a really good friend who was in the mortgage business. This was 31 years ago. In the mortgage business, and he goes, "You should do mortgages." And I'm like, "Okay, I have a mortgage. Why should I sell mortgages?" So we talked about it, and he goes, "Because you can explain stuff to people, and you're a numbers guy." And so I got in the mortgage business, of course, when rates were going up at the time, and it was interesting. And I went from salaried or hourly to 100% commission, and my wife's like, "Really? You're going to do this?" So that was 31 years ago. I'm still doing it.
Nice.
I like what I do.
Yeah.
So
I feel like it aligns too so well with your talents, with your skill sets, because you have that financial acumen, and you were talked about teaching folks about financial literacy and financial freedom when you worked with Leon. And now in the mortgage industry, do you find that you're able to bring some of that knowledge to bear when you're working with your clients and customers to help them understand mortgages and what they can afford and how they can budget this in?
Yes. So I kind of always joke with people. I said, nobody grows up wanting to be a mortgage person. And there's lots of great mortgage men and women out there that do not have degrees in finance and may never even gone to college. But I do find that my finance degree and somewhat also working with Leon over the years, I'm able to ask certain questions of my clients, not so much to tell them what they should do, but find out what their goals are. And I believe that you can tailor the mortgage to where their goals are. Everybody's got their own set of goals, whether it's short-term or long-term or a combination thereof. And then to have that conversation with people and be able to break the numbers down for them and say, listen, I understand that owning a house is somewhat psychological and emotional because we build memories and whatnot, but owning a house is also a financial entity. Hopefully you're going to make money on it over the time. It's an investment. You can make money over time. So how do we best position the debt to monetize that and to maximize that over time?
Boy, Mark, what you just shared, I was thinking to myself, I don't know how many folks are out there that get that type of great coaching and consulting from their mortgage officer, because, sometimes people feel like, they just want to close a deal, but you're really helping people develop strong and sustainable home ownership, which after we had the recession in 2009 and 10, I think that's what people want. But even what you talked about, I was thinking about the difference between the 15-year mortgage and the 30-year mortgage, right? And how many times folks are always asking, well, wait a minute, I can own it in 15 years. And you're helping them say, okay, but is it worth the extra payment versus what you could invest, or vice versa? So that type of consulting is they're very fortunate to have you, because you can really help them not only get a mortgage for their home, but plan financially for their lives, which is such a big component of it, because the mortgage is usually one of the largest expenses for families out there.
That's correct. Usually the biggest expense. So I'm a little bit of a debt manager, but I use a program called Mortgage Coach that I've been using since I got them in floppy disks.
Oh my gosh.
I was one of the first users of the program. Now it's all digital and online. And it really helps to lay out, for instance, the 15 versus the 30. So we talk about that. And I always tell my clients, you can do whatever you want, as long as you can sleep at night. Whatever decision you make, you just have to be able to sleep at night. It doesn't. At the end of the day, it doesn't make any difference to me. I'm not making the payment. So we look at different options, and like the 15 versus the 30. How much are you saving a month by doing a 30? Yes, I know you're going to pay more in interest over the long term, but I'm a cash flow guy. Mm-hmm. Let's look at how much you're saving, and if we take that money and invest it elsewhere, what does that look like over the long term? It gives you liquidity. The money that's sitting in your house generally is locked in. You have to pay me to get it out, or you sell the house, right. Which sometimes doesn't make sense. If your money is all tied up in the house, there's a opportunity cost that you may not be able to seize a financial opportunity because it's going to take too long to get the money out of your house. Yep. There are things that people never think about. So we talk about that, and again, this goes back to their long-term goals. When do you want to retire? How old are you? If you're young, do you have daughters? Have you planned? Are you already saving for their weddings and for college and blah blah blah? And we go through it, and I don't get heavily into it. I'm not a financial planner, but it helps guide them. Yeah.
No, I love that. And I think that's so important, because you want to be careful you're not doing their financial planning, but you're also saying, look, take a look at the mortgage in the holistic view of everything. That's what we love about our graduates, is they go out to make an impact in the world. They're not just working at jobs, they're making contributions to the world and to other people's lives. That's so important. Now, you mentioned working with Leon Lebrack and how that was very helpful. And we know Leon, I'm very grateful for his support of Walsh. So tell us a little bit about who were your mentors, and what, maybe pick one or two mentors along the way, and what did you learn from them?
So I don't have specific mentors. I worked with Leon, and Leon was a catalyst for how I think. We didn't always agree. Leon was a big 15-year fixed mortgage guy, mm-hmm. and I was never. I would run the numbers, and I go, I don't understand why you think that way. Mm-hmm. And I think it was we agree to disagree kind of thing. But
we should bring him on and do a panel just on that alone. That would be fun. There's a financial planner called Rick Edelman out of New York. I don't know if you've ever heard of him. So years ago he wrote a book, 11 Reasons Why You Should Carry a Big Long Mortgage. Mm. And I've gone to see him live, and I read the book, and I catch some of his podcasts. I believe in a lot of how he believes as far as financial planning and that kind of thing. Mm. But I just think that everything should be tied together. Working with Leon and doing what we did, teaching basically Ford and Chrysler employees, both the blue collar and the white collar, really helped me kind of gain the knowledge of how to help people. Yeah. One of the things we always had to do, we had to tailor the class to their own specific retirement plans, their 401k, and I used to get in front of a group of blue collar guys when we started talking about 401ks, and this was back in the 80s. It's the late 80s. So they're like, well, we don't have to worry about it, because we're going to have pensions forever. Oh, boy. And I would stand there in front of all these people. Again, this was well before any meltdowns. Mm-hmm. And go, what happens if something happens and you don't get your pension? Well, you would think that I just landed from Mars with 3 eyes and I was purple with pink polka dots. They thought I was crazy. Mm-hmm. So I've always been a worst case guy. Let's plan for the worst and hope for the best. Yeah. And that's just kind of how I teach people, and that's kind of how I run my life. Mm-hmm. It's just, you just never know what's going to happen.
So
yeah, who could have foresaw what happened years later? So I know that, we probably can't ask you too much of this. Everybody probably asks you, and it's okay if you just give general, but where do you think things are headed? Because everybody is asking that question, is like, what's going on in the economy? Are we in a recession? Are we not? What are you seeing with housing market trends? Because it looks like things are not on the market, or if they are, they're selling pretty well, but there's been so many fluctuations. So give us kind of your take on what are you seeing?
So we have an inventory problem. So we don't have enough houses to sell. So there's one major reason, and that's the meltdown, the 2008 meltdown. If you look at what happened, long story short is when home values started to crash and burn, the banks stopped writing checks for development. So the builders stopped building. So we're about at the level that we were previous to that, but we have this huge gap. Depending on who you talk to, we're looking at between 2 and 4 million homes behind the 8 ball. I don't know how you get back to that without building a lot of homes.
Now, is that because the population is growing, or it's just they're shifting from renting to owning? Like, how do we have that many more people then trying to get a home?
We do have an issue where you've got more and more people that are in the home buying market. So we've got more people that would like to buy homes and move out of their parents' home. And their parents would like it.
And their parents would like that too, yes. But not Walsh College grads. They're already out.
Right. So we have so that's the major problem why there's a lack of inventory. The next problem is that 70% of homeowners with mortgages are below, I want to say it's 5%. So we call it the lock-in effect. So if you're sitting at 3.5 or 4% on a mortgage, unless you need to move, are you going to run out and get a 7% mortgage? I'm not. I mean, I'm going to be honest. I understand what's going on out there. So you've got people that are locked into their homes that would normally move. Now they're only moving because of schools, family size, jobs, that they have to move. And then you've got the people, the older folks, the baby boomers that normally would be downsizing. Because of the cost of housing, they're not downsizing. They're aging in place, so they're not moving. So you've got basically two groups of people. You've got the first-time homeowners who aren't leaving, and because they're not leaving, it's not opening up that level of homes for the first-time home buyers.
So there's a whole convergence of factors. You can kind of see how along the continuum it's creating that
right.
jam. Yeah. Wow.
So now we're back, we're already at the place this year where we're and again, this is very regional, but especially in the Tri-County area, we're already overbidding. So most homes are going above list, and most buyers have to do an addendum called an appraisal gap addendum. So long story short, you buy a house the house is listed for $200,000. You go into $250,000.
Yep.
You're telling the seller, hey, if the appraisal comes in at $200,000, we'll cover the $50,000. Well, that's pretty hard for first-time home buyers.
Absolutely.
They don't have that money to do.
Yeah.
So it's tough. And I do a lot of work with MSHDA, with the down payment assistance program, that helps. And you can use some of that money within certain circumstances to cover part of that gap. But it's difficult for first-time home, very difficult for first-time.
So where do you see this going? You think the market will adjust and correct?
Well,
do you think more building is going to happen? I noticed there's a lot of different, let's say retail or commercial properties that are not full because of COVID and the hybrid environment or online are converting to residential, obviously if the city allows it or their zoning allows it to meet this demand.
So where I think we're going to head it is this comes back to an inventory problem. We are building more homes. Building is up. The problem is you can't build a house, at least in our neck of the woods, at a price point that a first-time home buyer can afford.
Right, yeah.
Now, there is a new class of manufactured home. I don't want you to think mobile home. It is a manufactured home, but it's called an MH Advantage. They're built under a roof. They're a lot less expensive. They're pretty much cookie cutter. But if you drove past one of these, you would never know.
Yep, it would look just like a home. I know what you're talking about. Yeah.
So there's manufactured homes. There's modular homes that are less expensive, and then there's stick built, which is the most expensive. A lot of people think the government should get involved to try to help bring down the cost of building. I'm all about helping first-time home buyers. Based on my 30 years in the business, I'm not thoroughly convinced that Washington has any clue what I do for a living and how to really help buyers. I just don't. I think that, one of the things that they're floating is to help people with tax credits and whatnot, first-time home buyers. Well, that's great. I don't want this to sound the wrong way. We don't need a flood of more buyers. We need more homes.
Sure. And more affordable homes. More
affordable homes.
More affordable.
And there's a ton of home buyers that are sitting on the side waiting. Mm-hmm. And there's a number that was thrown out there for every 1% decrease in the mortgage rate. I think like 2 million or 3 million more households qualify. They may not run out and buy something. So all these people that are waiting for rates, when rates finally start to drop, and that may not be till next year at this point, they're going to enter the market, which is just going to exacerbate the problem. So we need to, as a society, we need to figure out how to create less expensive homes that people want to buy.
Yeah. Oh, and it's so funny because it's like each time we solve one problem, the market and the economy produces another one. But what I love, Mark, is like just the care you take, and you've talked about this during this interview about the approach you take with your clients, how you really want to help them be strong and sustainable homeowners. And that's why you've been in the business so long. It's not like just a quick trip for you. You're like, you really want to help people long term. So if they want to connect with you and they want to work with you, because there could be people listening going, wow, he knows what he's talking about. He has experience. He understands my predicament. How can they reach you and how can they connect with you to work with you when they're ready?
So really the easiest way is just to call me my cell, 248-705-8431. It's the only phone number I use. I do have a desk phone that's forwarded to myself.
I know we all like a desk phone. What's that? Well, we'll make sure we put contact information in there, but I just want to make sure folks know if they want to work with you or they're choosing to, they can say, wow, this is really a great experience because he has our whole financial health in mind as well. So, and we're so proud of you. I always say our mission in the world as a college is realized when our alumni are living and working it in the business world, and that is you. And so thank you for joining us today on this awesome podcast.
I appreciate
and thank you so much for listening. This concludes another one of our amazing interviews with our Walsh College alum in our Walsh College Creator Studio. Thank you so much for joining us.